The trading session should be the least cognitively demanding part of a trader's day. And for most traders, it is the most demanding. And that reversal is the source of a large portion of the errors, the fatigue, and the inconsistency that makes trading feel harder than it needs to be. The reason the session feels so demanding is not that trading is inherently difficult. It is that most traders arrive at the session with work still to do, decisions still unmade, levels not yet identified, context not yet established. And so they try to do their analytical work at the same time they are doing their execution work, mixing two states of mind that function best when kept separate. The analytical state, which is calm, systematic, and unhurried, and the execution state, which is responsive, fast, and rule-following. When these two states are mixed, neither works well. The analysis is rushed because the market is moving and decisions feel urgent, and the execution is compromised because the analytical mind is still running, generating second thoughts, alternative interpretations, and new information that introduces doubt into what should be a mechanical process. The front-loaded work model separates these states entirely. Everything that can be decided before the session is decided before the session, so that when the market opens, the only task remaining is execution, checking criteria, acting when they're met, managing according to the plan, and recording the result. What belongs in the pre-market preparation varies by setup and time frame, but it always includes, at minimum, identifying the key levels the session is likely to interact with, noting the market context that defines whether the trading conditions that day are within the range the plan was built for, reviewing the setup criteria so they are fresh and clear rather than recalled under pressure, defining the maximum risk for the session. So position sizing requires no in-session calculation, and answering the question that determines whether the session should happen at all. Are the conditions present that the plan requires? Or is today a no-trade day by definition? That last question is the one most traders skip, and it is often the most important, because trading on days when conditions are outside the plan's parameters isn't just unproductive. It is data that corrupts the trader's understanding of their own edge, because losses taken outside the plan's conditions get mentally attributed to the plan rather than to the decision to trade when the plan said not to. The practical marker of whether pre-market preparation is complete is simple. At the moment the session begins, the trader should feel less anxious, not more, because anxiety at session start is almost always a signal that preparation is incomplete, and decisions that should have been made before the open are still being deferred. And a trader who enters the session feeling genuinely ready has typically done the work that readiness actually requires. There is also a compounding benefit to consistent pre-market preparation that only becomes visible over time. As the routine becomes habitual, the quality of the analysis improves because it is no longer competing with execution pressure for cognitive resources. The execution improves because it is no longer competing with analysis for attention. And the trader's relationship with the session changes from anxious to methodical. Not because trading became easier, but because the work was moved to where it belongs. The week's theme has been built on a single insight. The hard work of trading happens before the session, not during it. Vetting setups, defining criteria, building the plan, completing preparation, and the session itself is the payoff for that work. A period of calm execution rather than real-time problem-solving, where the trader's job is simply to follow what was already decided, collect what the edge produces, and leave everything else alone.